This is David Rodriguez, quantitative strategist for dailyfx.com, here from a very foggy New York. Normally, I think we've discussed this before, normally that's a view of Governor's Island, Statue of Liberty, and in the distance over there, the Verrazano Bridge. But today it's a whole lot of fog, so very unusual. But anyway, today we want to talk about, the title of the presentation is Automated Trading. And, you know, if you follow along with me before, you know that that's my specialty here at DailyFX, or my specialty in trading, period. But that's what I focus on in terms of research publication, and that's actually what I trade on. Actually, I do place some discretionary trades, but the vast majority of my capital is towards automated trading strategies. So that's, you know, I'll never say something if I don't have skin in the game. Let's put it that way. So anyway, let's start by talking about what's going on right now. What's going on right now? A whole lot of nothing, actually. It's a bit frustrating to see, you know, and I'll start with the dollar yen. We've been talking about the dollar yen, talking about the dollar yen a lot as of late for good reason. It's been one of the biggest movers. But if you know a lot of the strategies that I talk about are proprietary trading strategies here at DailyFX, you also know that they tend to be trend and trend following and high volatility strategies that will do better in faster moving markets. So the dollar yen has been moving a lot. Unfortunately, it's been moving a whole lot of nowhere. And that's one thing that, you know, I referenced it earlier on Twitter, but that's one thing my colleague Christian Kerr was talking about a bit earlier. Pardon me. He was saying the dollar yen bounces sharply, but it's still vulnerable. Why is it so vulnerable? Because it showed real signs of weakness. And kind of the biggest thing here in terms of our automated trading strategy outlook, so to speak, is seeing what happens next in pairs like the dollar yen. And the dollar yen is just, again, is one of our focuses last quarter, especially, you know, the first, second, and fourth quarter of last year. The dollar yen and yen pairs were just fantastic. So far this year, it's just been a whole lot of nothing. And what Christian points out here is simple. You know, that's the year-to-date high right there at about, I can't actually see his chart exactly well, so I'll bring up my own. The year-to-date high is right at about 105.40. The year-to-date low is 102.90. That's actually a fairly big range. But the problem is, and Christian talks about this, coming back, starting kind of in the days of open outcry and pit trading. You know, open outcry isn't dead, but for most intents, everything's electronic now. But the reason that's significant is simple, because, you know, the first hour, let's say, of trading every day was kind of a back and forth, and, you know, no one was really showing their hand, so to speak, and pushing the market where they wanted it to go, or, you know, the trend was far from clear. Well, once you got a break out of that opening range, then, you know, true intentions were made clear, and the market really started going in one direction or another. The same thing kind of applies. Markets are fractal, so if you see something in the big picture, you'll see it also on higher frequencies, you know, shorter term time horizons. So in this case, we're interested in the monthly opening range. The opening range so far is almost 300 pips, 260 pips, give or take. And to have real confidence in any dollar yen forecast, I want to see a break beyond these major levels here. It's 102.90 to the downside, 105.40 to the upside, and frankly, we've seen too much potential weakness in the dollar yen to really believe that it's going to resume. You know, it's just been too sharp a correction off of what was arguably a major sentiment extreme for me to believe that the dollar yen uptrend is alive and well. Now, if you saw my top trade article for 2014, I did say the dollar yen long was my favorite trade, and that hasn't necessarily changed. The thing is, though, you know, when you see appreciation in the dollar yen, it's natural to have corrections. And as a longer-term bull, you know, the fundamentals, the fact that Japan has the itchiest trigger finger, so to speak, or the most ammunition left in the so-called currency wars battle, is enough of a reason for me to maintain my Japanese yen bearish bias, dollar yen bullish bias, especially as the the Fed pulls back monetary policy stimulus. But, you know, in the short term, a lot of things can happen, and that's exactly what we're watching for. I want to see a break of, you know, these opening ranges. So I've got a couple comments here. Yeah, guest says, horrible start, a lot of fake moves. I got a compliment on my tie, thank you. Guest says AV good, and another says good morning from Pittsburgh. So Lonnie asked a great question to start off, and let me get into that before I get into my overall strategy outlook, because it's also a bit muddled anyway. So Lonnie asked, do you ever close the automated trades manually? If so, do you have a rule that you follow? So that's an excellent question, and yes, I do. The way I do it is pretty simple. So let's just go into our automated trading systems right now and just give you a sense of what's going on. So I'm going to click on Open MiraTrader. Actually, before I even do that, I'll go right here and get to my weekly strategy outlook column. Weekly column right here, and it's always at the top of the, you know, the heap right here. It's published every Monday morning. I'll often publish an update on Wednesdays. But basically, what I was talking about was this. Last week was big volatility. This week, smaller volatility. So we talked about which strategies we liked, or I liked, in the week ahead. I'll be very honest with you when I say that we've so far seen fairly mixed results. The Momentum 2 strategy was my focus this week, but we've been chopping around a bit. It's not at all a great week for this trend following strategy. You know, it's just going to happen, unfortunately. But to get to Lonnie's question, let's get in here and just think about things a little bit here. Once we take a look at what the strategies are doing, we can then get a sense of, okay, do I trust the strategy to fully take full advantage of this trade? And in certain instances, for example, our Breakout 2 system was designed with stops and limits in mind. So Breakout 2 is actually, you know, it's a strategy that in certain market conditions, I just let it do its thing. I don't really touch it because it has good money management logic built in. It uses a mix of fixed profit targets and a trailing stop to keep you in a trade for longer periods of time. So I like it. And, well, in all honesty, this is the past 60 or so days in Euro-Yen, and this is not normal. It has done extraordinarily well. And obviously, past performance is not indicative of future results, so that's not why I show this. So Breakout 2 is the kind of strategy that I leave it to its own devices. Momentum 2, on the other hand, which is the strategy which I'm focusing on this week, and we can get a sense of, okay, it's done extremely well in the Euro-Australian dollar currency pair in the past 60 or so days. Again, this is far from normal. I will say that this is one of our streakier strategies, so if it's doing well, it'll either do really well or poorly for a long period of time. Right now, it's on a hot streak. It's not going to last forever, but, you know, I'd say play the hot hand until you can. But the reason I bring this up is simple. It's currently floating 46 pips, and it doesn't show it here, but the system doesn't use any fixed profit targets at all. It basically just uses, or it does just use, trailing stop, which is good and bad. It's good because if you hit a home run, so to speak, if you hit a really big trend, which happens maybe 5% of the time, then you're in a great position to take full advantage of the trade. It's bad because you end up taking a lot of losers or taking a lot of trades that were winners, but you held it open too long and it just did its thing. So in this case, you know, let's use a concrete example. Right now, this is, you know, my little sandbox portfolio right here, which currently focusing on Aussie dollar and Euro Aussie. So right now, I'm currently in a Euro Aussie long from 52.20. And again, it's not exactly a home run by any means. So I'm not looking to take profit just yet. But let's say for argument's sake, and it's only one lot, so I can't take partial profit even if it's actually only 2 lots. But we're talking about micro lots here, so we're not talking about a great deal of money. For argument's sake, I might say, look, volatility is kind of low right now. I'm not necessarily convinced that the Euro-Australian dollar currency pair is going to break substantially higher. And I don't know offhand where the stop loss is, but it should be about, you know, 1 ATR away from price, give or take. So when I say ATR, let me put this on a daily period right here. It should be about 150 points away. Don't quote me on that, though. I could look it up, but for the sake of brevity, I'll just do that. So right now, it's stop loss. Actually, I kind of like that stop loss. It should be around 51.10, which also coincides with what's been a stop and reverse level for the Euro Aussie a couple of times. So if we break below that, I'm okay with getting out of the trade. When would I manually close the position or take profit or just tell a system to leave me to my own devices? Well, let's say for argument's sake that we have a hard time breaking out of this, you know, monthly opening range here, which yearly opening range really. The year-to-date high is right here at 53.60. So it's the kind of system where, again, you're going to hit a home run every once and again, but you're also going to, you know, to badger or to berate the baseball analogy, you're going to hit a lot of pop flies and strike out a bunch. So in this case, if we see real difficulty in clearing 53.60, and again, we're only talking about 2 microlots here, so I'm not exactly, you know, my trigger finger isn't exactly too itchy right now. But I could take something off if we, again, test 53.60 and fail to break higher. On the flip side, or for argument's sake, if we start trading towards the 2013 highs right here, 55 or 56, and again we see difficulty there, I might consider taking some of it off, because again, if you're only using a trailing stop, it'll work really well 5% of the time. Don't quote me on that number, but it's going to be something along those lines. The rest of the time, you're just going to strike out a bunch, so it's not necessarily the way to go. A lot of it depends on your kind of trading personality as well. Like, over the years, I've conditioned myself to be okay with a million paper cuts. Not literally, obviously, but I've come to understand, and that's a big reason why I'm into auto trading, because if I'm discretionary trading, it's like anything else. You have 5 consecutive losing trades, you get discouraged, you don't want to trade as much, you get a little, gun shy and so on. That's tough. And I'll be very honest with you when I say that I'm not good at that. Well, that's where automated trading really comes into play for me, because I've conditioned myself to basically say, look, I think the strategy is going to do well. It might not. Actually, it probably won't. Worse than 50% winners. But I'll accept that. Again, a ton of paper cuts aren't going to kill you. They'll sting, clearly. But it's the kind of thing where I'll just set it there, and I'll change my strategies every once and again. Don't get me wrong. I just don't leave anything on all year. But it's the kind of thing where you're taking the long view. And I will tell you, very straightforward manner, my accounts enter long drawdowns for extended periods of time. Actually, they're in a decent drawdown right now because Q4 was great. Q1 2014 not so good so far. That's what it comes down to for me in terms of auto trading. So all Grace points out, an article including your answer, discussion, and perhaps beyond related to Lonnie's great question would be very helpful. Cheers. It's a great point, actually. I haven't done kind of a big picture educational article in a bit. Been more focused on the short-term moves, but especially now that not much is going on and we kind of need clarity anyway, it's a good time. All right, All Grace asks, separate question, differences between the title shift and Momentum 2 strategies. So I'll be very honest with you when I say that title shift and Momentum 2 should be virtually identical. I will point out, and I believe this is why you're asking, that there are some discrepancies which we're looking into actively. I have been paying attention to your emails and Twitter mentions and so on. So that's something we're actively investigating. Ultimately, we're probably just going to get rid of the confusion and just stick to the strategy that I constantly talk about, which is Momentum 2. The guest says, I thought this would be more on the lines of which multi-factor research leads to your automated trading models. So, I want this to be more of an interactive session. That said, I could do that all day. To that end, I'll point you to the research that I've put together over the years. Hold on, I'll tell you right now. So guest, I will introduce you to just a broad overview, and this is the big picture kind of backdrop for what I personally use, and what actually I personally use, yes, but our automated trading automated trading strategies, the proprietary ones, the ones that you see DailyFX Plus on the name. This is their little motor, and I'm talking about trading using sentiment to trade. To give you the brief synopsis, we see repeating trends over time, and I'll always say past performance is not indicative of future results, and that much is clear. That said, some of this is based in real human psychology, and let me go ahead and do this. Actually, I'm gonna show you a quick presentation, because actually I haven't shown this in a bit, and it really puts full context into kind of what we watch on a regular basis. So let me see where I have this. It's right here. Bear with me one second. So what I want to show you is this, talking about the factors that go into our trading. So put simply, if you look at real retail traders, and I look at retail traders because that's the data to which I have the best access, you'll see that the vast majority of the time traders are actually making money. So this chart shows you that, you know, this is a year's worth of trades, about 10 million trades. Actually, it's more like 12 million. 59% of all Euro-US dollar trades were closed out at a gain. Well, the problem is that every loss was worth twice as much as every gain. So clearly, traders are losing money over the time. Now, why would I hang my hat on that? Well, put simply, because let's, one second, show presentation on primary monitor. You know, why would I think that that's repeatable? Let's just talk about pure human psychology here. If I gave you a choice between two gambles, in the first choice, or let's talk about the gain side of the equation first. So I give you choice A or choice B. Either I have a coin in my hand. It's a fair coin, you know, even odds. I give you the choice between basically wagering, you know, if I flip heads, you get $1,000. If I flip tails, you get nothing. Or I give you $450 just for playing. You know, that's choice B. Which would you pick? You know, from a pure probability perspective, if you play the game a million times or even 10 times, there's a very strong chance that, or virtual certainty over a million times, that choice A will win out every single time. And yet, the vast majority of people, a strong majority of people, would actually take choice B, because when it comes to gains, we'll take them off the table, especially when you've had your hand burnt a couple of times. You say, I'm floating a gain on euro dollar, 65 pips, I'll take it. On the flip side, though, and that in itself is not going to make you broke. But the problem is that when you go to the flip side and say, okay, let's reverse it. It's same coin, fair coin, choice A, you lose $1,000, or you're wagering 50% chance of losing $1,000, 50% chance of losing nothing. Well, or you just lose $450, period. That's choice B. Again, if you play the game 10 times, choice B is most definitely going to win. If you play the game a million times, I can virtually guarantee you that choice B is the better choice. But the vast majority of people get a little frisky when it comes to losses. They say, I'm not going to take that 450-point loss. I'll wager that the market comes back in my favor. And the reason I bring this up is simple. Pure human psychology. And this isn't original to me. I'm not that intelligent. This is based on research for something that, you know, Daniel Kahneman and Amos Tversky won the Nobel Prize for 30 years ago. And what it comes down to is this. Losses hurt more than gains give pleasure. So this is a very simple little diagram, and it basically says, okay, let's call the y-axis like pleasure points or pain points on the negative side. Well, if I lose 200 points, I have 4 pain points. Or lose $200, I get 4 pain points. If I make $200, I only get 2.5 pleasure points. And that's a problem as a trader because they're morally equivalent. That $200 on the downside would erase the $200 on the upside. Why does that matter? Well, ultimately, and it comes back to my original point, is we are trading against the crowd. It's not always going to work, but based on, you know, real human psychology, that's the main factor that goes into our automated trading strategies here. And just to give you a broad-based overview, you start with the most basic. You start with an idea. If you get something out of the idea, you know, very early stages, and you see that the idea holds some merit, then you start talking about creating a strategy around it. If that works, if the very basic results work, then you start talking about, oh, well, how do I improve it? And that's been my passion for a number of years now. So that was a really long-winded question, but that gives you the backdrop to our automated trading strategies. And, you know, I'm glad you asked that question because it's been a while since I really went from square one and really explained, because obviously, you know, all Grace, I see you in here all the time, and I really appreciate the support, but I also want to, it's also helpful for me even just to take a step back and just take a look at, all right, what are we really looking at here instead of just, you know, plain numbers and figures and so on and pips. What are we really trading? And that's basically what it comes down to. So cheers for that. That's great. Mr. Lucci asked, how often is the SSI updated? So on DailyFX Plus, which is our client portal, it's updated twice daily at about 7 a.m. Eastern Time and 1 p.m. or slightly before 1 p.m. on most days, Eastern Time. It's updated twice daily here. Now the SSI, which is, again, the engine, or short for Speculative Sentiment Index, which measures what real retail trading traders are doing, driving our automated trading strategies, the strategies themselves see SSI updates once a minute. They might not necessarily trade once a minute, but they see them once a minute. Excuse me. Here, you can see the data twice daily. So whenever anyone asks me for more frequent SSI updates, I say, look at this trading strategy logic, which is very transparent here, and take a look at what the strategies are doing. You know, if I click on this Momentum 2 link right here, for example, it will tell me exactly why Momentum 2 just entered a trade. So I'll take that, and with that, see where the SSI stands. So, all right. Mr. Lucci asks, can we see SSI updated more on DailyFX On Demand? Indeed you can, Mr. Lucci, and that's actually a great value add from the DailyFX On Demand service. And if you don't know what Mr. Lucci is talking about, definitely check that out. I'm personally not on DoD, but I do talk to my colleagues here in New York, especially David Song and Michael Boutros regularly. They're constantly talking about the SSI. It's a big thing that they talk about for good reason, because it's really one of those things that I believe can give you an edge in your trading. So guest asks, hi, I'm using FXCM MT4. Is there a way I could open those automated trades? In fact, there is, guests. So let's take a look here. So you go to fxcmapps.com and you go here to catalog MetaTrader 4 Expert Advisors, and you can in fact get the DailyFX Plus trading signals right here and there. So check that out. Now these we have to charge for, and there's a benefit to using this in lieu of the MetaTrader platform. The MetaTrader platform is basically a semi-automatic. You don't have to keep it's what we call server-side auto trading, so you don't have to keep your machine open at all hours of the day or have a virtual machine. This will take care of all of it for you. MT4, as you know, I'm sure, it's client-side, means that you have to have a virtual machine and/or, you know, run up an electricity bill as you keep your, you know, your computer on at all hours of the day with constant connection to the internet. So that is available. I personally prefer the semi-automatic server-side approach, which is why I talk about MetaTrader. And actually, let me get a link to MiraTrader so you can find out more about it right here. See where I can find it. Here it is. So where'd my window go? Right here. And you can check out more about MiraTrader right here. I have the bad habit of assuming that everyone knows exactly what I'm talking about all the time. So, you know, definitely take a look at that. You know, you can see a couple of videos there. Sign up for a practice account and really kick the tires for a bit. Cheers, All Grace. I have not. That's another great comment. We've had a really great session so far today. And cheers, thanks for the kind words. Have you published an article that basically goes through your thinking process, which leads to your matrix, identifying the active strategies, currency pairs for the week? Not in those words, actually. It's another great point. You know, first things first. You know, take you from. You know, I've been doing this for too long, and I have the bad habit of assuming that everyone knows exactly what I'm talking about at all points. But it's definitely worth talking about the factors that go into the trade, and especially, you know, as All Grace mentions, talking about which strategies or how do I select the strategy on a given week. Then that's such an important part, because no strategy is going to work 100% of the time, not even close. I mean, there are strategies that are super high probability. They tend to be martingale. They tend to risk 10 to make 1. If you ever see a strategy that posts 90% winners, it's because it never takes a loss. It means that it's going to blow up eventually. But I digress. The moral of that tangent was to say, we know that our proprietary strategies don't make money most of the time, actually. So we play the probabilities here. And I'll definitely look into, or I'll definitely work on an article that kind of goes over that in further detail. So cheers for that. Guest asks, companies like ZuluTrade and Oinda are offering sentiment indices almost real time. What hinders FXCM from offering the SI on an ongoing real time basis? You have enough human resources to make this reality? So it's a great question, guest. We're looking into making this a bit more available. That said, I will say that FXCM, in my opinion, has access to, or looking at total trading volume, FXCM is one of the largest, if not the largest, retail trading broker in the world. So, in my opinion, we have access to arguably the most representative sample. So I'll set that apart and say that I really believe in RSSI. It's not only because I work here. Beyond that, to answer your question more directly, we are looking into this. I can't make any promises, but we are looking to democratize a bit the data, especially as we look to make changes to our website. I have no timeline on that yet, but it's definitely a point taken and something we're actively working on. Cheers. Guest asks, what are the pros and cons between ZuluTrade, NinjaTrader, and MiraTrader? So I don't know ZuluTrade. I do know NinjaTrader. NinjaTrader is basically a more advanced MT4, or more. It's not necessarily even more advanced. It's more about way more features and a different programming language. But again, it's a client-side automated trading software, automated trading platform. So the big difference between NinjaTrader and MiraTrader is the fact that you have to keep NinjaTrader on at all hours of the day for it to trade your account. MiraTrader is server-side. It will trade your account regardless of whether you're logged in. You know, you could be 1,000 miles away from the nearest computer, and, you know, knock on wood, as long as, you know, our servers are up, the strategy will be trading. All right. Mick says, do you say that we know automated systems don't make money over the long haul? No, apologies for any ambiguity. I said that automated trading strategies are not going to be, you know, they're not foolproof. They're not always going to make money. That said, the strategies that I regularly cover, so the Momentum 2, the Breakout 2, which are the two big ones, have made money. I've watched them trade live capital for the past 7 years, or at least the systems off which they're based. And they've had drawdowns. They've had negative years. But taking a long view, I believe that these systems will do well. Now, in the short run, obviously, if you know that market conditions are not conducive to a breakout strategy, which currently they're not, or I don't believe they are at least, then, you know, avoid, you know, trying to jam the square peg into the round hole, and that's exactly what my approach to auto trading is. And to answer your question most directly, Mick, there are strategies that are profitable over time, and I've seen them with my own eyes. Now, past performance does not guarantee that they will continue to be profitable, but taking a long view, and again, it comes back to the factors that go into it. When I'm talking about trading against the crowd, it's based on real human psychology. It's based on something that I feel comfortable hanging my hat on, so to speak. So it is something that I believe would be successful over time. Sinup says pictures are blurred. So yeah, I can zoom in here. That's not a problem. That said, I'm not really talking much about what's going on right now. So don't worry about that too much. Actually, yeah. Oh, actually, I can't zoom in on this. Apparently, I can zoom in on this, for example. Lonnie said, was up on the euro yen and sterling yen, but just watched it all disappear. Wanted to close, but didn't have a rule to close it manually. So in this case, Lonnie, I'm right there with you. To be very honest with you, I was betting big on the yen crosses because the systems treated me well, even in December, which is unusual. Actually, well, in all honesty, I shut my systems off by the third Friday of December, so I wasn't in the final weeks, but which actually worked out well because I was also out of the office. But to get to your point, I mean, it's going to happen. With the yen crosses in particular, and I started with talking about the yen in great detail, it's something where we need to see a big break in one direction or the other to have confidence, have greater confidence. And let me zoom in here because this I will talk about in further detail. Well, 1 second. So this is what this is what I opened with. The dollar yen monthly opening range. The high was 105.40, and monthly it's January, so it's annual opening range as well. And the low was 102.90. So to really gain confidence on those yen crosses again, Lonnie, I want to see a break. I think it's going to be to the downside because, and this is something that Christian caught, almost to the pip. It was uncanny. He said, he published an article, I believe it was on the 27th of December, and said the yen could go lower, the dollar yen could go higher, but we're way overcooked. And he looks at other sentiment indicators in conjunction with the SSI, and he said, this is probably a good time to look in the other direction, look for a correction, and sure enough, that's what we're seeing. I think we can see a bigger correction. I want us to see a bigger correction because that'll give me, as a long-term bull, a better price at which to get long over the course of the year. But in the meantime, euro yen, sterling yen are in a tough spot because the yen doesn't know what it's doing. Markets don't know what they're doing with the yen crosses right now. Let's wait to see if we have some clarity. And what I'd honestly do, something I haven't done yet, is dial back a little bit of leverage on those yen cross trades on our automated trading software. So guest asks, or actually, let me go in order here. I will definitely get to all these questions. Guest asked an excellent question. I already have an account with FXCM, but trade using MT4. Do I have to open another account for MiraTrader? Can I log in using my MT4 credentials? Yes. I can say with virtual certainty, I've never personally used MT4, but FXCM has developed what we call single sign-on. So you can use the same FXCM, TradeStation 2 credentials to log in, or TradeStation Desktop to log into TradeStation Web. Same login to use MiraTrader. So that should almost certainly work. Although I do greatly encourage you to first test the waters with a practice account before you start touching some buttons here on your live account, because there's a small learning curve, and you don't want to put needless capital at risk before you're fully comfortable with the platform. All right, so guest asks, what is the exact track record of the strategy shown on MiraTrader? I can't find these statistics over the past 7 years. You just mentioned it. So there's a number of reasons why we don't share that. It's not for the sake of hiding the strategies. We have full confidence in the strategies. But here's the thing, and I'll be very candid with you. If you put those multi-year trend or multi-year track records, the problem is, and this isn't unique to FX, all mutual funds in the world put as much track record as they have. The problem is, and that in itself, transparency is a great thing for the most part, but human nature dictates, it doesn't dictate, nothing is set in stone per se, but there's volumes and volumes of research that show that people get into mutual funds to just abstract from the FX side of things at the exact wrong times. It's the same idea here, to be very honest with you. We do share 60 days worth of data because we don't want anyone to fly completely blind. But, for example, the yen was just incredible in the final quarter. Yeah, Q3 into Q4. No, that was September. So Q4 of 2012 to Q2. The yen crosses were just fantastic trades across those trading platforms. And had we shared, 6 months worth of track record on those, I guarantee you that plenty of people would have piled on the leverage, the capital, and so on just before a major drawdown. Can we share more data? Yeah. There's a reason we don't share more data, and really it's more about picking the right strategy for current market conditions and doing the best we can. Also, when you share that kind of, it's not a back test because these strategies were running. When you share those kind of results, you assume that the person, the individual trader had the system on at all times, did not tinker, there were no server outages, and so actually the server outages would be included because that means that our trading systems were down as well. That's extremely rare, by the way. It's also an unfair kind of look at how you could have done because, results are different. There's a huge hypothetical performance disclaimer that I have to put every time that I show an equity curve, or a hypothetical equity curve especially. So, cheers to that. And it's really for the sake of, let's focus on what's likely to work now instead of looking at what's worked in the past 7 years, because markets change a lot over that kind of period of time. Okay, so I have some very candid words from Mr. Anton Duzovic. Says that I'm wrong 100% of the time. Anton, I apologize. I obviously disagree. My job here is to help traders, help clients as much as possible. It's fully transparent. I'm on FXCM's payroll. That said, DailyFX is its own entity within FXCM. So every single person you see on DailyFX, and myself included, we have skin in the game. We're passionate FX traders. I'm never going to say anything that I don't honestly believe in. So if I'm wrong, it means that my trading capital is also losing money. It's not my business to be wrong at all, but like anything else, I'm far from infallible. If I were infallible, I would not be doing this webinar right now. I can tell you that right now. But in all honesty, I apologize if I've led you astray at any point, but like anything else, I'm doing this to the best of my ability. The connection between DailyFX and FXCM is very transparent. We are FXCM employees, but that doesn't mean that we're not passionate about trading, as I definitely am, and I can speak for the rest of the team when I say everyone on DailyFX feels the exact same way. All right. So Synap asks, is DailyFX Plus subscription free of charge? So if you hold a live FXCM account, you can log in with the same login information as you do your regular trading account. If you do not have a live FXCM account, you can subscribe at $19.99 a month. Although, in all honesty, why would you not just open an account and save yourself $240 a year? But that's my 2 cents. Cheers. Mr. Lucci says, is there a link that gets updated weekly with all the webinars in DailyFX Plus and this room? Indeed there is, Mr. Lucci. So let me go right here. It's fxcm.com, And actually, you can go to fxcm.co.uk or whichever entity with which you're trading, and go to this page. This page will always show updated information for all webinars on DailyFX, DailyFX Plus, and some of the webinars on the DailyFX forums and other, FXCM entities. But I can tell you for sure that DailyFX and DailyFX Plus will always be on here. So take a look at that. All right, I have some kind words of support. I always appreciate it. And so listen, I'm not doing this for an ego trip, so I have no problem responding to critique. Listen, the second I think that I'm over critique is the second that I blow up my account. So I actually, to be very honest with you, I appreciate bad feedback or constructive criticism more than good feedback, because constructive criticism lets me improve. And I'm not saying that to be all, touchy-feely or whatever. It's the honest truth. The second you think that you're above learning more or getting better, the second you're just going to blow up an account and just do stupid things. So, Anton, again, I appreciate the candor. I really hope, my analysis and the research I put out can be a better assistance. I apologize if it's led you astray, and I can tell you with 100% certainty that I will be wrong all the time, but it's always a work in progress. Guest asks, are these really automated, or it's something like a PAM where someone opens a trade and it gets copied over to every copier's accounts? Great question. No, it's definitely really automated. There's no manual intervention unless something goes wrong, which is extremely rare. So these are, the way it works is that we send the signals directly to the server. The server then says, okay, who's subscribed to these signals, and we'll put the trades in their account. So I guess it's semantics. I guess that could be construed as a PAM account, but they are fully automated. There's no one hitting buy or sell here, and that's how they work. All right, so it's been an awesome session. It's the best one of these webinars in recent memory, so I really appreciate everyone taking out the time. If you have any further questions, don't hesitate to contact me via Twitter. The reason I always post Twitter here is because emails pile up really fast, and I don't like seeing emails pile up really fast, and it's hard for me to respond to a lot of them at the same time. Twitter's fast. If I'm at my desk, which is actually the majority of the day, I can respond to a question pretty frequently, pretty rapidly. If you're not on Twitter, get on there. It's free. It's a great way to follow traders, and there's no exaggeration to say that a lot of the time Twitter beats professional news feeds to major stories. It's not perfect. There are some flaws, but it's a great service. Ruchi asks, are we taking live trades? No, Ruchi, at least not now, unless the systems which we're focusing on are taking live trades. This is more about automated trading right now. And actually, my little sandbox here isn't a couple of live trades, but those didn't happen now. So no, we're not actively taking live trades. All right. So again, contact me on Twitter. I don't think I'm going to send the archived version of this webinar via email, but I will upload it to YouTube. And I'll tweet out the link. Sign up for future email updates via my email distribution list. Again, I thank you all very much for your time. It's been an awesome session. Best of luck trading, and I'll talk to you soon. Take care.